Hello everyone, my name is John Paul, DayTradeToWin.com. Today we're going to discuss a prediction, a forecast, a historical pattern that is extremely accurate. I'm going to review with you the January effect for 2020. This may help us understand, should we buy, should we wait for the market to retrace, should we buy the breakout as soon as it breaks the high. So this is going to be for especially the new traders who haven't followed me and Day Trade to Win on the January effect as I've done throughout the last 10, 11 years. This is going to be a very good video for you, depending on whether you trade options or futures or Forex. It's going to help you. So before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. Talk to your broker. Understand the risks involved with any type of trading that you do. What I have here on the chart, what you're looking at is the S&P 500, the E-mini. Currently, for the last 2 days, today is January 27th, the market has taken a big sell-off. And even though you may have taken advantage of this sell-off as a trade scalper user or using the Atlas line or any other type of trading method that you use, we still have to understand that with history, it can and may repeat itself. The January effect has been very accurate, and it could lead me to be a buyer and go long for a higher probability trade if it happens. So we're going to look at the first day of the year trading. The opening price was 32.37. I have it here listed, which happens to be right here. And currently, after we had this big run up that you see here, currently, as of today, the price is 32.42 quarter. Now we are right at the cusp of almost not being an up month, but we still have about 4 trading days left to decide whether or not the month will be higher closing than where it opened at 32.37. So we still may see a few days of the market going up. Now, if it doesn't and the market continues to go down and closes lower than where it opens, then there is no January effect for the year. Now, it doesn't mean that the year may not go up or be an up year and move higher. It just means historically the probability of it occurring isn't on our side. Every year we look at the January effect to tell us whether or not January has a higher close than open. And if it happens, the year will usually continue higher and higher and higher. So this is yet to be seen. How are we going to take advantage of this? Well, what I want to do is I want to make sure that every time the market makes new highs and breaks these highs, so currently we have these highs here at 33, 39. When the market breaks these highs, you have an option. You can continue to buy it, go long. It could be for a day trade. It could be for a scalp trade. It could be for a long-term or swing trade where you're holding on to the trade for a trailing stop. But more importantly, which I think that's difficult to do, is whenever the market begins to turn around and retrace at least 3, 4, 5 days, a good healthy retracement, that's when I start paying attention, because when this retracement finishes and it begins to move back up, the likelihood of it testing the highs that exist, the most recent highs, is very good. And it's on our side to go long as it tests those highs. Now, the best way to do that isn't just jumping in, hoping it's going to go up. The best way to do that would be to look at a retracement and then a continuation of it breaking the midpoint of 50%. So when you look at the market retracing 3, 4, 5 days, look at that point the market breaking the midpoint, the 50% of its retracement. And once it breaks that, you can then go long and take it all the way up to test the highs. Now, it may not look pretty and it may whipsaw along a little bit before it gets to those highs. It may take a couple days or a couple weeks, but the likelihood of it testing and breaking the current highs and then moving higher is on your side. Now, I like to use, as some of you know already, the ATR. If you follow the videos that I have out there, the average true range with a setting of 4. This is the value that I use for targets. Now, you don't have to go for 30 points or 20 points or 40 points, but it gives you a perspective of what could be achieved. And I'm going to use this ATR as an example of what happened in 2019 and 2018 to show you in this video how accurate using this ATR for a profit target can be. Here we have January 2019 as an example. Here is the first day of January. Here is the last day of January. You can see that the January 2019 month closed higher than where it opened. So it's clearly an up month. That means that the year, historically, a high percentage of the time will close higher than where it opened. We're talking above 90% accurate on this method. So I mentioned to you that every time the market breaks the highs, which it did here, you have an opportunity, at least for a day trade, not that you want to hold on to it for weeks on end, but every time the market breaks the highs by a point or two, you have an opportunity to go long and look at this ATR for a profit target. That's a good strategy, but it's even a better strategy when you see 3, 4, 5 days in a row of the market retracing. When this happens, you're not going to just buy it. You're going to wait until the market, I'm going to expand this out here a little bit so you could see. You're going to wait until the market breaks the midpoint by a point or two, have a stop or a stopwood limit ready to be a buyer, and now you can take it up all the way, testing the highs, which are here. So the goal is to look at a new high, look at the retracement that occurs at least 4 days, 5 days, nice and healthy where it's clear. I wouldn't consider this a very good retracement. The market's more sideways, but this is a nice clear retracement. A couple days in a row, and then once it turns around and breaks the midpoint, the 50%, I use this tool here in NinjaTrader. I think that most trading platforms have it. You don't have to use NinjaTrader to identify this. Once this breaks, you can go ahead and go long. Now, a lot of the traders that I work with, you could see, and you know already the price that you want to be long at because you're waiting for it to break that midpoint. You can go ahead and not only have a stop there waiting to be long, but you can use something like the Atlas line or any of your other methods, or you can just scalp trade all day to the long side. So you're using a combination of expecting the market to break that midpoint and go higher, coupled with one of your own methods. So the traders who have the Atlas line use the Atlas line. It's an up day, so they're going to take every long trade. And you can use the Atlas line as a filter to make sure that price is on the higher end of the Atlas line before going long. You can scalp, use the trade scalper all day. You can use the ATO. You can use all the methods we teach in the mentorship program to go long. But really the idea is this is expected, and now it's just a matter of filtering it down and getting in correctly. A few points above that would be the optimal point to go long on this trade. Now, I said to you the profit target, if you look at the ATR here, it's about 34 points, 30 points. So even if you wanted 30 points on a trade like this, if you look at 30 points, moving from where the midpoint is, even a little bit above that, to the high where it's testing, that happens to be 46 points. So here's 32 that I'm expecting, 32 points, and the market moved to test those highs 46. There's plenty of room there to make 1 times the ATR of 32 points. You don't have to take 32 points, take 4, take 5, take 10, but know that there's enough distance, enough room there to make 32 point opportunity. Now the same thing is true, let me just resize the chart so you can see it. The same thing is true as we continue on here in 2019, a retracement. Now you could look at this here and you can say, is this a retracement or not? Well, it broke the highs, so we have a new high. The market went down 1, 2, 3, 4, 5. It's a very minor retracement. If you consider this a retracement, this is where you would enter long. As soon as the market breaks this 50% marker on its way up, you're going long to test these highs. The same thing is true if you look at this here. All of this area here is a huge retracement. As soon as the market breaks the 50% marker, you're up, you're long. Make sure that the Atlas line or something that you're using in addition to just this method helps filter out any trades. And now the goal is to get all the way back up here. What's that distance, you may ask? So the distance from here to here is roughly 108 points. The ATR is telling me that 38, even if you're looking at 35 or 30 points, is achievable. Did it happen? Absolutely. So here is your goal for it to test the highs, which it did. What about this next trade here? We have 1, 2, 3, 4 to 5 days. Nice clean retracement, a pullback after making new highs, which it did. Here is a new high. Again, once again, look at the opportunity to buy it once it breaks the highs, coming back and testing those new highs. So there's a big difference if you look at a retracement like this. This is a huge retracement down compared to just a few days. So the examples are a little different, but the method is traded based off of price action the same way. The same thing is true here. This is 1, 2, 3, 4 days that the market retraces, the minimum that you have to have, and then it came back up to test those highs, just like that. All right, so the market retraced at least 3-4 days, came back up. Again, you're looking at about 25 points. Let's see what 25 points looks like. It went 30. More than enough room for you to take 5, 10 points out of that. The same thing is true with this retracement here. Again, we have more than 4 days. We have all of this. And then we have this. Again, remember, once the market breaks the 50% marker, which it did here early on, you go long. You can go long again, right over here. And you can go long here again. And you can go long here again. And you can go long here again. And once again, go long. The market never came back down to these lows. And yes, there is some chop and some flip-flop. Is there enough that you can't make 5 points on each of these days every time it crosses back above the 50% marker? Remember, the goal is to see it cross and make and test the highs, that distance. Yes, I think you can, and you will be able to make at least 5 or 10 points for the day. This is 38 points in that one instance where it broke the midpoint. There's a lot of room there that you can work with. And if you have a tool that can help you filter out some of these trades, like the Atlas line, like any type of method that you want to use on your own, I would recommend that you use that as well. And so from here to here, the distance is 125 points, and it did in fact test those highs. And again, if you doubt the validity of this method, here it is again. It made new highs, came back. That's 85 points back up to test those highs. Once again, 1, 2, 3, 4. Really, 4 is the minimum I'd like to see. That's a small retracement. All the candles are bearish, and we have this retracing back up to go long. All of these examples are doing the same exact thing. There's nothing different that they're showing us. The market retraces, the market stops, turns around, tests the high. I want to go long a couple of points above the 50% marker, just so I know I'm on the right side of the trade. And here we are in 2020. So that's 2019. So there's a little homework I want to give everyone. Go back and look at 2018, 2017, 2016. Go back as far as you can with data. This doesn't change. This is very accurate. And if you have any questions, feel free to email me, support@daytradetowin.com. Check out the next mentorship class, which I go into pure price action trading in the methods that I teach. If you're interested in the trade scalper, it's doing excellent. A lot of traders are really enjoying the profits that are being made with the trade scalper. There's the at the open, there's the Atlas line as well, and everything else that I teach. I see you guys in the next video. Stay safe, and I'll see you. Good luck trading.